Good evening, everyone. This is Atticus from The Complete Trade, and today I'm going to be taking a look at Bitcoin. So, starting off with the breaking news that Moody has changed its outlook on the United States credit rating from neutral to negative. Now, Moody is not the only credit rating agency to make headlines regarding the United States credit rating. Back in August of this year, Fitch downgraded the United States credit rating from AAA to AA+. Regardless of the short term noise, this is just indicative of the World Economic Forum's prediction that by the year 2030, the era of US dominance will have finally come to an end. This is the same organization that published the infamous saying, by the year 2030, you will own nothing and be happy. I mean, just look at how happy this man is not to have a single penny to his name. Basically, when the reign of the United States is over, we're going to have one single global government ushering in the beginning of a new world order. Now, obviously, all the 10K bears are holding hands and doing jumping jacks, celebrating the Moody downgrade, even though I can promise you that 99% of 10K bears didn't even know that Moody was a credit agency to begin with before the breaking news broke out. Okay, moving into the technical analysis, last week we talked about the importance of the 0.5 Fibonacci channel line, which is the light green trend line. Just a quick recap, the 0.5 Fibonacci channel line was resistance back in 2022, support back in 2021, and it even caught the bull market top back in 2017. Now zooming in, so this week, Bitcoin did tag the 0.5 Fibonacci channel line, and price quickly dumped from $38,000 all the way down to $35,700 in the span of about an hour before recovering all the way back up. So we were correct in our assessment in the last video that some bears would show up in the purple resistance area that spans between $38,000 and $42,000. That being said, on the weekly time frame, both Bitcoin and Ethereum are both posting bullish weekly candles with no bearish topping signals in place. Currently, Bitcoin is just hovering alongside the broken white demand trend line that we've been talking about for a few weeks now. So yes, Bitcoin is at resistance, but we don't see any topping signals for a confirmed local top at the moment. Both resistance and support levels at the end of the day are meant to be broken, or else all assets would just trade sideways forever. Even if Bitcoin does see short-term downside, our $80,000 and $175,000 targets remain unchanged despite Moody's downgrade in regards to the outlook of the United States credit rating. Just putting this piece of news into perspective, Fitch, another credit rating agency, downgraded the United States credit rating back in August, and today the S&P 500 is less than 10% away from new all-time highs. Don't buy into the FUD, focus on the technicals. Okay, so moving into some indicators, starting with the RSI. Obviously, the daily RSI is very overheated with bearish divergence across multiple pivots. However, this doesn't suggest that $10,000 is on the horizon. As you can see, earlier in the year, there was bearish divergence across multiple pivots, and yet Bitcoin is still up nearly 150% year to date. So just because there's bearish divergence doesn't indicate that a 70% crash is on the horizon. Okay, so moving into the MACD, very similar to the RSI, there is divergence on both the histogram and the signal line. Now, if we zoom out to the weekly time frame, the bullish picture becomes a lot more clear. The weekly RSI has gone into overbought territory, which is very typical in bull markets. Additionally, there is no weekly bearish divergence on the MACD because both the signal line and the histogram are both higher than the prior pivots. And finally, the volatility expansion index is still indicating that there's more volatility coming over the next few weeks and months. Very similar to Ethereum, Bitcoin has not had a high volatility reading dating back to June of 2022. So definitely expect a prolonged period of volatility for Bitcoin. Okay, so shifting gears to the S&P 500, not much to talk about. On Friday, we did have a gap fill towards the upside, and we reclaimed this broken demand trend line. Now, there are plenty of gaps to be filled towards the downside, so perhaps the downgrade from Moody will cause the S&P 500 to correct a bit, and perhaps we can start forming a potential inverse head and shoulders pattern that will push us to brand new all-time highs. Now, taking a look at some indicators, the bears aren't giving me much to work with here. There is no bearish divergence. The S&P 500 has created a new local high, and the RSI has created a new high as well. Taking a look at the MACD, both the histogram and signal line have made new highs relative to the prior pivot, so there is no bearish divergence. The only thing I see is bullish divergence on the RSI indicator. The new all-time high targets haven't changed. The target of this wave 5 extension of our initial impulse off the low still remains anywhere between $4,870 and $5,102, aka the 0.618 trend-based fib to the 0.786 trend-based fib. Now taking a look at the Bitcoin against the S&P 500 valuation, not much has changed. We continue to push higher and make new highs, but as stated in previous videos, we are at Fibonacci resistance. We're still targeting new all-time highs, and as established in almost every video, if the Bitcoin against the S&P 500 valuation continues to push higher, that means we are in a bull market and not a bear market. So taking a look at some regression, just a quick overview, the red region represents Bitcoin's overvaluation, the green region represents Bitcoin's undervaluation, and the blue line represents Bitcoin's fair value. Bitcoin's fair value this week is at $35,179.71. And as established in every single Bitcoin episode, once Bitcoin rips past the blue fair value line, that's when the real fun in the cryptocurrency markets begin. And we saw that this week. Several altcoins across the board, ranging from Solana to Polkadot to Chainlink to meme coins like Shiba Inu, have all started to blast on higher. Obviously, if you're well positioned in crypto, you're enjoying life right now. If you're ill positioned in crypto or are still shorting crypto, I really am not quite sure what else to say. More bad news for the bears. Bitcoin has never gone below the lower bounds of the undervalued region of the regression bands, which currently sits at $15,131.51. So if you're still someone who is clinging on to $7,000, $8,000, $10,000, or a $12,000 Bitcoin, at the end of the day, you can't cure stupidity. Okay, so finally in today's episode, I'll reveal how we calculated our $175,000 price target on Bitcoin. So if you recall the last bull market back in 2021, we did not have a blow off top as many investors predicted we would. Bitcoin instead formed a double top that led to nearly an 80% crash in the price of Bitcoin last year. So how can we explain this phenomenon from an Elliott wave perspective? Well, the only logical explanation is that for the first time in Bitcoin's history, we finally had some alternation between the Elliott wave corrections. Wave 2 happened back in March of 2020, and we all know what happened. Bitcoin suffered a very steep correction, which is very typical for a Wave 2 retracement. Last year, during the bear market, we had a very shallow retracement, bottoming out at the 0.5 Fibonacci level, which is very typical for a Wave 4 retracement. So how can we measure the target of this Wave 5 extension? So one method we can use to measure the target of a Wave 5 extension is by taking the 1.618 Fibonacci retracement of Wave 4, which would land Bitcoin at $173,000. Another method we can use to measure the target of a Wave 5 is by taking the 0.618 to 0.786 trend-based fib extension, which would land Bitcoin anywhere between $100,000 and $175,000. Hence the title of the series. If you want to check out the Bitcoin Bull Trap ETF video, I'll link that video in the description down below, where in that video I explain why Bitcoin may top out at only $80,000. Regardless of either scenario, our primary expectation for Bitcoin is higher, much higher. Okay, so that's my analysis on Bitcoin for this week. I hope you guys enjoyed the video, and I'll see you guys in the next one.